I want to start this out by saying what's good? What's good? My name is Shmoney D, and I am here with the homegirl Blanca,
Hello,
aka
hello.
say your DJ name for me.
My DJ name is Blanca G.
Blanca G. Okay, that's what I thought. I didn't want to say something else. You'd be like, no, that ain't my name. So we're here to talk about taxes for your business. And what's really cool about today's webinar is that Blanca G is one of us.
Mm-hmm.
So what's really dope is you're about to get an insider perspective on how we should be approaching our taxes as DJs. And look, normally we have until April 15th. So this is technically a timely webinar to have, but because of what's going on, taxes, the due date for filing has now been extended to July 15th. So you have time to get this figured out, but this is a great opportunity for you to reassess how you organize your taxes over the next few months and get yourself a system set in place so that moving forward, you have a smoother ride in handling your taxes and getting organized and prepared for it all. Because trust me, it takes time. And if you're disorganized, it can be a nightmare. Okay. So let me share my screen because Blanca and I have had a few conversations about what we were going to organize for you. And here it is. So, bam.
There we go.
Dealing with Uncle Sam. Blanca, please actually, before we jump into the slides, tell us a little bit more about your background.
Okay. I grew up in the tax business. I grew up in a tax office. I was literally 12 years old when my mom gave me something to do. She was like, you want something to do? I was like, sure, why not? I did my first short form at 12 years old.
Wow.
I know. And my dad has been doing taxes for over 30 years. He worked with legal aid and so he wanted to figure out a way to help people out, the middle class out, without breaking the law. Mm-hmm. And of course the middle class, when it comes to the middle class, a lot of people do work on the side where they get paid in cash, and it's considered self-employment. So he was able to figure out a system as to how to get you money back or make sure that you don't have to pay the IRS. And if you pay in, it's not as much. Everything 100% legal. Now, some stuff that we're going to talk about today, the IRS doesn't even teach because they kind of don't want to help us out sometimes. You know what I mean?
Yeah.
So, but we know the ins and outs. We know how to do everything legally, what we can put, what we cannot put in there. Especially whenever you're a DJ, there's a lot of investment that goes into your business that you don't even think of that you can put in there.
Absolutely.
And not many people know about that.
No.
So lately, I've actually been doing taxes for the past 8 years with my family.
Uh-huh.
And we have people that literally travel from California, from Chicago, from Florida, from different states, all over Texas, just to come do their taxes with us. Because not only do we want to make sure that they're done right and correctly, we also want to make sure that you're also educated.
Totally.
That's the main thing. That's the main important thing, is that you know what's going on with your taxes.
Absolutely. Speaking of education, disclaimer, we got to have that because look, our whole thing is about making sure you get better familiar with what you need to be prepared in having your taxes ready. This is not a substitute for legal advice. This is not a substitute for professional tax advice. We are just sharing with you what we think is important, or in this case, what Blanca thinks is important for you to know moving forward with your business.
Right.
Cool. So here's what we're covering. Feel free to take it away.
So what we're going to be covering is basically what's considered an investment, what we can, write off, quote unquote, in your taxes, put it in as an expense, what receipts to keep and why you need them, bank statements versus receipts, which one's better, or to keep both, whatever, whenever that comes to it. Records and ledgers, how to organize your expenses, whether you should organize just your expenses or also organize what's coming in cash wise, or through your DJ business, self-employment, and deductions. And we're going to get into a little bit of what you know, franchise, like I don't want to say franchise, but like mainstream, I guess, tax preparers, like H&R Block and
Hmm.
you know, stuff like that. What they don't tell you, because the IRS doesn't even tell them. So there's deductions that we're going to be going over that not even they know about. And it takes years to learn all of this. And so I'm going to basically kind of tell you stuff that I learned. It took me to about good 4 years to get under my hat, and it took my dad 30 years, you know, all in this webinar, kind of a little bit to kind of get you guys going and understanding more about what you're putting in there.
Yeah. So in continuing the For the Culture series, we're taking 34 years of information between Blanca and her dad and distilling the most important points for you in an hour. Like, this is game. And if you are on your way, like if you want to become a 6-figure DJ, you have to handle your taxes. There's no other way around it. You know, you can't be a high paid person, a high paid DJ, and like not pay anything when it comes. They're gonna come after you. Someone's gonna be reporting something. IRS gonna know something. And if you don't have it together, there's a story, real quick. Kevin Hart was sharing this. He said his first big payday was $250,000 early on in his career. And he just, after taxes and not taxes, but after his like lawyer fees and management fees, all that, you know, it's, let's just say $200,000 he took home, and he spent all of it. Nobody warned him about how to handle your taxes. So what ended up happening is the IRS audited him and put a lien on his property and garnished wages on future checks. So he was making money, but let's just say a $10,000 check came in, he might be seeing 2-3 grand of that because he owed the IRS a bunch of taxes that he didn't pay when he got his first big payday. So this information is super critical for you as you scale your business and grow your business, because Blanca about to hook it up. Let me tell y'all, she's about to hook it up. So should we move on?
Yeah, let's go.
Let's do it.
So what are investments? And we're not talking about 401ks or IRAs or stocks. Those are way like different than what we're talking about here. Your 401k, of course, if you pull it out, you're going to get a form. They charge you for that. Or IRA, same thing. Stocks, a whole different form. No, we're talking about your assets. So you're looking at your sound, if you want to go to the next one. Right, your DJ equipment, your sound, your speakers, you know, your lights, your light rack, your laptop.
Sorry.
And as far as assets go, you're looking more at your equipment, your laptop, you know, the vehicle that you use, you know, to transport you. And then on top of that, you also have your monthly investments or your expenses. Basically, you're looking at your music. You know, I mean, I think last year I spent like over 2,000 in music and software alone.
Mm-hmm.
You know, bank fees, those overdraft fees, they add up. They add up. Those bank fees, you know, that monthly fee that that hits your bank, you know, your cell phone. You know, where are they going to call you at to book you?
Right.
They're going to call you for, you know, on your phone.
Right.
You know, I use Spotify to learn, like, to get that new music that's coming up. Your gas, sorry about that.
It's all good. It's all good.
Your gas, you're not going to go fill up just for a gig. I mean, you use the gas that's in your vehicle already. You know, they call you last minute for a gig, you're available, you're going to go. You're going to use that same fuel that's in your vehicle. So what we usually do is we kind of like get the monthly $20 a month, or no, that's a little less. I mean, I'm talking like $20 a week, $20 every 2 weeks, right? 30, a good 40% of that. Does that make sense?
Wait, so if you're talking about filling up your tank for $20 every 2 weeks, because if somebody's doing that, wow, that's amazing, because that's totally not me right now. Ever. It's never been me.
That's just a ballpark. I meant like maybe $40, 40, $50, $60 every 2 weeks.
My gas bill is like anywhere from 200 to 400 a month, depending on what's going
Yeah.
on.
Something like
California.
that.
Thank you, California.
I'm
Stupid.
in Texas. It's not that expensive over here.
So lucky. So lucky. God.
So yeah, you're looking at filling up every 2 weeks with $40.
It's nice.
I just filled up the other day. So, but yeah, so, there's a percentage of that. Advertisement, your business cards, your website, all of this live streaming stuff. You know what I mean? You got to pay someone to make your flyers, stuff like that. Oh, and on top of that, for those who are streaming and just got in all of that new stuff, the iRig, if you're getting all this
Yep.
this equipment to live stream,
Yep.
all of that, we can put it in next year.
Absolutely.
You know what I mean? The vehicle insurance, your legal fees, what did you pay to get your taxes filed last year? All of that. If you use like LegalZoom and stuff where they charge you like $50 to help you make a contract, there you go.
Throw that on.
Yeah.
Throw that on.
Anything that you can use for your business, anything that you use for your business, it's a write-off.
Yeah, absolutely. So, think about it. You can even consider even like your website alone. If you use, like I use WordPress. So that means if you use a site like Squarespace, that fee is all inclusive of website design, basically using their template, plus hosting fees. But if you host your own website, then you have to pay a designer, or you can build your own website with something like Squarespace, but then you have to pay a company like DreamHost, Bluehost, HostGator. That's a whole separate thing because your site has to live somewhere. And hosting just means that you can park your site here. So whenever somebody searches, the internet directs them to that place. That's what hosting is all about. So that's a tax write-off. Dropbox can also be a tax write-off, right? Because I have a lot of files on there that I use. Let's say if I want to send contracts to clients, I could send them a Dropbox link. Or if I want to send music to people, like it's used as part of my business. So really dig in and go through all the details of your expenses. Make a detailed note and say like, well, I use this, I use that, I use that. Like these categories that Blanca had put together are big picture general things, but it's up to you to really go in depth. And even things like cables and screw adapters for microphones, like all these things count for the bigger picture.
Your supplies, I mean, some people can spend $50 in supplies because they have like really good microphones, you know what I mean? Or really good cables but how many times do you forget them? You have to go to the store and buy one real quick.
Yeah.
All of that. Yeah.
Write it off. Question about clothing. How can you write clothing off?
If it's specifically basically for your performance, yes. Okay. So for performance attire, you are able to write that off.
So if I'm buying a new Louis bag and Gucci slides, not so much?
Not so much.
All right, cool. Glad
but
I didn't get those just yet.
Let's say, for example, you have to wear, like you wear ties, right? Or some people, you have to dress up for some of these gigs, right?
Totally.
So, for like weddings and stuff, depending on what you're doing, you have to wear a tie. You don't wear a tie on an everyday basis.
Right. It's like almost like a uniform of sorts, right?
Exactly.
There's some places that require me to dress in all black. So if I'm buying, black slacks, black button down, then
all of that.
Okay, great.
Yes. Like, for example, I have a small record label and I had an artist sign. So I would actually send her with the stylist to buy her clothes for the stage.
Yeah.
And so all of that, I put that on there.
That's what's up.
Yeah. Okay. So, I mean, if you're saying, oh, I like this shirt and I like it for this gig, for this gig that you have coming up, let's say you have a beach party coming up or something, and you like this tank top specifically for that gig, go ahead.
Okay. Got it.
Yeah.
Should I move forward?
Yeah. So as far as keeping all of the records for your expenses, receipts, the ink wears out, on the receipts. Sometimes, I mean, I don't even like receipts. I don't like extra paper. So I usually try to go for the bank statements. Does that make sense? So like,
it does.
If I go buy a new guitar or a mixer or microphones, I make sure that they email me because it's right there. I still have receipts from 2014 in my email. you know, and they actually tried auditing my 2014s last year.
Oh,
And
wow.
yeah, I sent them my lawyer information. They left me alone. But yeah, so your best bet is keeping those bank statements, because, you know, you can just download them or just ask your bank for them. You know what I mean? As far as receipts go, keep a box just in case. But, you know, it's just a backup. But for the most part, try to keep your bank statements.
And how long should you keep your receipts for?
At least 5 years.
Okay.
At the very least 5 years.
Okay, great.
Yeah.
Great. And also another thing, like in an early version of what we were talking about, you were saying use a debit card because those directly go to your bank and can get categorized, right? Credit cards are also really good, a good way of keeping records. You can also, with some companies, you can like actually categorize what specific purchases are, but just be very careful if you're using cards that you don't get, you know, financially sloppy with it and not pay your bills on time or not pay all your bills, because then you're racking up interest charges, late fees, things like that. And we want to avoid that at all costs.
I would try to stay away from your credit cards whenever you're purchasing stuff for your DJ business. Something that you could do is have 2 separate bank accounts, like 2 separate personal accounts, and nickname one for your business and nickname one, you know, that way, because some people, you know, want to go and you can register your business to get a business account open. But let's say you hardly, you know, the only time you purchase something for your DJ business is, you know, whenever you actually need it. Like, you know, for example, I already have all of my stuff. I don't need to go and make purchases on a daily basis for my business, even though I do have a business account. But if you want, you can do like 2 personal checking accounts, one for your personal expenses and one for your business expenses. That way, you know, you're just starting out. You don't need to register, you know, your business yet. You know what I mean?
Yeah.
So you can just do a separate personal checking account and use that for you know, for your DJ business. Buy cables with it, everything. You can use it for gas. That way you have your fuel tracked, all of that.
Definitely. So you're advocating for, like, people have a separate account that has money in it that they're not, that's the thing about credit cards, right? You're borrowing money in that case, but you're saying, look, I'm putting $1,000 in here and that's my budget for my business. And then whenever I get paid from doing a gig, I put that money in there, and that way I'm tracking and not overspending.
Exactly.
What's going on. Got it.
Right.
Got it.
You can take care of it. And that way you don't lose your statements.
Yeah. And you have everything tracked. Yeah.
Exactly.
Perfect.
So we were talking about ways to keep our records, and we just talked about bank statements. QuickBooks works really great.
Yep.
If you can't afford QuickBooks, something that I do, I use my, you know, how you were saying earlier, your bank account. You know, it can separate, you know, your expenses, but you just have to be careful, because sometimes, you know, you're going into a store and they probably sell clothes, but you also see an adapter that you need.
Oh yeah.
Like, you know, like Hastings.
Totally. Yeah. Yeah.
I never went to Hastings for music stuff, but, you know, there's people who get some stuff, you know, for Radio Shack with Hastings, you know, and and you're like,
wait a minute.
So, but yeah. So really great ways to keep tracks of your records is you're using QuickBooks. I mean, it's like what, $10 or something like that. Excel's free. You know, that's basically doing it yourself on Excel as well. And then there are ledgers that you can order.
And what is a ledger for people that might not know?
It's basically a book, you know, where you can put your expenses by the month, you know, and you can be like, you can put like fuel, and you can track fuel on one line, you know, and then you can do one whole month on one page. Or yeah, and then at the very end, it's basically a journal.
Yes. Journal of expenses, right?
Yeah.
I forgot, actually, Mint. Have you heard of mint.com?
No.
So Mint is like a baby QuickBooks. It links up to your personal accounts or whatever accounts that you decide to link it up to, and it can track your purchases. So that could be a free resource. Intuit owns Mint as well. I use QuickBooks Online, and that I forget what the monthly is for that. But Excel is a great way to do it too. The thing is, here's the difference with using something like QuickBooks or Mint versus Excel or paper ledgers, is that you're paying for the convenience, right? With QuickBooks and Mint, you can attach them to your bank accounts, to your debit cards, to your credit cards. So every time I make a purchase, it goes into the QuickBooks ledger, essentially. And then now I have a record of what's going on. It automatically starts to categorize certain things. I have to spend the time to say, you know, a purchase from Trader Joe's is for groceries and a purchase from Guitar Center is for equipment. But the next time I go to Guitar Center, it automatically tracks to equipment. So when I have my statements at the end of the year, everything's automatically categorized. It's doing that automatically.
Yep.
If you don't pay for that, then you have to take the time out every month to write down what you're doing. So that's the main difference, is you're paying for the convenience of having it automatically done versus taking the time to actually sit down and manually write it out. And if you're just early on in your career, your DJ career, maybe writing things out might be the way to go, because you're not going to be spending a lot of money on stuff. But as you're growing, as you are acquiring more equipment, as you're getting the random USB plug from, you know what I mean? Like from Ross or wherever, you can then, Hastings, you can then track and let them know, like, this purchase was actually for equipment, you know, in QuickBooks. So those are the two things to consider if money is a concern for paying for something like QuickBooks Online. Mint is a resource as well that might work for you too.
Exactly. And I know there's a lot of stuff that is virtual. However, I mean, if you're like me, you live in a small town where your contracts are still paper. Because I mean, I still use paper contracts. You know, I keep a folder of nothing but contracts. You know, and that's just contracts for 2014, contracts for 2015. We're in contracts for 2018, 19. A different folder for each year.
Yes.
And that's a really great way to keep it. If you're doing digital, well, you already have everything. If you use PayPal, you know what I mean? Because I just actually booked a DJ from Detroit.
Oh, nice.
So she sent it through me for PayPal. So I'm like, hey, I need to do this.
Yeah.
But yeah,
easy.
Right. So I mean, yeah, keep a folder for your contracts. If you want, you can keep a folder where you can, like I said, I get my receipts on my email. You know, because I order stuff online because we have like a small music. We have a Tar Police music here in town, but you know, they don't have much DJ equipment. So you have to order stuff online. So you can print out your contracts from your email, or not your contracts, your receipts from your email, and keep a folder with them just in case. Or a box.
Hard copies are nice to have.
But just letting you know that if there's an audit, I can tell you a little bit of how it goes. If you have a lawyer, they will listen to you. If you don't have a lawyer, they won't even take the time.
Okay.
And if there's people who go with boxes of receipts, they won't listen to you. If you have a lawyer and your bank statement, you're good.
Okay. So if you ever get audited, lawyer
bank
up.
Statements.
Bank statements. Yeah. Definitely lawyer up, Jan.
You can call us too. We can help you out.
That's what's up. Yes.
Right. So deductions that we're able to take, and these are deductions that not many preparers know how to use. And I mean CPAs, tax, you know, I say preparers because I'm not a CPA, we're not accountants, you know, anything like that. We are specialists. We are tax specialists. This is what we specialize in. So depreciation, and you know, in the insurance business, you know, auto insurance or anything, everybody knows basically what depreciation is. It's whenever the value goes down every year, right? So let's say I bought a brand new 2017 or 2020 Titan, right? Nissan Titan, just to haul my stuff. The time for depreciation is 5 years on if it's brand new. If it's used, it's 3 years. So what that's going to do is it's going to depreciate every year for 3 years, and that's going to put an expense on your well, how do I say this, on your taxes. So it's the expense, right? The thing with that is let's say we need more. we need more of an expense, because all of these expenses, what they're doing, they're bringing your income down and bringing your refund up. If you're in the red, it brings that negative to a positive, right? Because we need less income. And that's basically what we try to do with our company. We try to kind of make sure that we balance everything out to where we can get you the maximum, or make sure that you don't pay. And if you pay very, very little. The last thing I want is to give Uncle Sam my money, right? And some people don't really care. They're like, you know what? I don't care. I just don't want to pay. That's the main thing. It is either being even or getting some money back. So depreciation, once again, it's whenever the value goes down, and it's an expense. Section 179, however, this is something that the IRS does not train, these big tax corporations, the preparers that prepare your taxes at these big the mainstream, not the mom and pop shops. Even some of the mom and pop shops, they take the training from the IRS, but the Section 179 is something that the IRS does not train.
Okay.
And the reason why is because it's meant to help the rich people. And whenever you're self-employed, whenever you do something on the side where you get paid in cash or anything like that, we are entitled to this. We are entitled to this deduction, and it helps you out. You have no idea. And the fact that a lot of the time the IRS just wants your money, they don't want to be paying you money. They're not going to go and train these other offices.
Right.
They don't put it in their tax training, I guess, if you say.
Right.
And this is the deduction that my dad actually found, because he wanted to make sure that we help people out. You know what I mean? Legally, in a legal way. So Section 179, instead, and I mean, this goes for your vehicles. This goes for your DJ equipment. This goes for your laptop. You can add all, like, your laptop with your DJ equipment. Let's say last year I bought a pair of QSEs, $1,600, right? Around there. Subwoofer, $3,000. Let's say I bought $10,000 worth of DJ equipment. Sure. Oh, I went ahead and splurged and also got me a new Mac. A good $12,000, right?
Let's say.
So instead of putting it as a regular expense or depreciating it, I could use that $12,000 right now, because I need to drop my income down by that much to make sure I'm okay.
Okay.
Because
Go ahead. I'm sorry.
Oh, and I can use 100% of that DJ equipment because it's 100% used for my business. Now, on a vehicle, however, we can also do that. However, like, if you're like me, I kept my DJ equipment in my truck. It's more secure. You know what I mean? Being a female, it's a little annoying having to bring it down, right? So the percentage of my truck that I used was a good like 75 to 80% of business use, because my stuff was in there all the time. So where my truck was worth $46,000, I can only do like 80% of that. But I could still use that chunk in Section 179 to bring my income down by that much, to make sure that I'm okay.
Okay.
That way we don't have to pay in.
So with depreciation, just kind of recapping what you're saying.
Right.
Depreciation is like if I buy a new car, as soon as I drive the car out, if I buy a new car for 20 grand, as soon as I drive that car off the lot, that car is now worth $19,000.
Right.
Right. Because cars never really hold their value throughout the life. That's why used cars cost so little. Right. And but depending on the car, it can maintain a specific value over time. So if I'm using my Nissan Titan that I bought for $20K, for DJing, I can use that for do I write off $20K on my current taxes? Do you know what I mean?
As far as Section 179 goes, and let's say you got that Titan specifically for your DJ business, and you hardly use it for any personal business at all, you know what I mean? You can write off a good 95% and use a Section 179 right then and there, instead of waiting for the depreciation. And
so Section 179 is about depreciation specifically?
No, depreciation is whenever the value goes down.
So what is Section 179?
I can use the value right then and there instead of waiting for it to depreciate.
So, okay. So,
I can write the whole thing off. It's basically writing the whole thing off right then and there.
so I can write off 20K instead of 19K.
Mm-hmm.
That's it. Okay.
Yep.
And now what?
And most of the time, it's basically how you would sell it, right? Now, keep in mind, let's say, and I like using this this example a lot. One of the computers at our office, right? You might see it worth as maybe $1,500. You know what I mean?
Mm-hmm.
Right? However, it brings the company in over $500,000 a year in 4 months,
Mm-hmm.
maybe more. Would we sell it for $1,500 if that's the only one? Would we sell it for $1,500?
No, I'd probably sell for more because the value of it.
Exactly. It's that monetary, it's that value that it brings you. So where your DJ equipment is probably worth 10,000, would you sell it for 10,000 if you're making 15, 20 grand a year with it?
Right. No.
That's your income. That's bringing in income. You would not sell it. It's basically selling your business.
Right.
You would sell it for a lot more. So when it comes to all of that, whenever we try to get assets in, we don't ask how much they bought it for. You know, let's say I've been racking up music equipment for years. I mean, I've been DJing for 8 years, right?
Mm-hmm.
I've been producing since I was like 13, so longer than that. You know, all of your guitars, your amps, your speakers, you've never put this in your taxes before because nobody ever told you about it.
Right.
So you just racked up 25 to 30 grand in nothing but music equipment.
Yeah, absolutely.
So instead of putting what it's like, what you got it for, it's like, how much would you sell all of that for? Obviously 30 to 35 grand. It makes me money.
Yeah.
It's my business. I'm not going to go and sell it for 15,000. Yes, it's used, but no, it makes you money.
Right. So that's why you can write off the full amount of what you bought it for instead of the depreciated value.
Mm-hmm.
Bam. Now, another question, because I've heard about you can spread this, and this might be like maybe the next step, but you can spread your depreciation over time, right? So let's say I buy the new Mac Tower grater for 5K, right? Because these prices are insane right now. So I buy that for 5K, and instead of writing off my 5K for the current tax year.
Yeah, the Section 179. Yeah.
Can I say, well, I'm going to write off $1,000 a year for 5 years because I can have my depreciation value stretched out over time.
Right. That's what we usually do. Whenever we don't need to use Section 179, we will depreciate it.
I see.
And if it's brand new, it's 5 years and we'll let it go down.
I see. So there are two approaches to it. So you can either depreciate over time or you can Section 179 it and use it all right now, depending on what your financial situation is.
Yes. Now keep in mind, if we use Section 179 this year, we can't use it next year for the same asset.
Okay.
So let's say, for example, you get a brand new truck, right? And or you get a truck and we use all of it because we needed to bring your income down. Yeah. And this is what I usually tell my clients is, here's the thing. I can get you this much, like $1,500, $2,000. You're not paying in now. And we keep some of the value on to depreciate for the next few years. Or we use it right now, all of it, get you 5, 7 grand, whatever. But you have to buy a new one next year.
I see.
You know,
I see. Yes.
But here's a really cool thing though. If you own your home, and not a lot of people know this. If you own your home and let's say you use your garage as your studio.
Yep.
We will value that garage. That garage is usually like $80 per square foot. So 20 by 20, it's like a good $60,000, $70,000 room. And we could, not only can we depreciate that thing by 10 years, or we can also use Section 179 on that.
I depreciate a part of my apartment. That's all equipment. So it's a strat. So what my understanding is, based on what you're saying, is that this is a strategy on how to minimize the income based upon what you're buying and how much kind of you brought in for the year. So if it was a really good year and you want to cut the numbers down a little bit, it's all a strategy. So I'm going to say, well, I made this big purchase now, and I'm going to apply that purchase this year to bring down the income a little bit. This is my, right? Okay. Yeah. Or if you didn't have a crazy year but you made a big purchase, then it might be more strategic to spread that out over the course of 5 years.
Right. It all depends. Like, you know, for a married couple, let's say a married couple makes over 50 grand.
Mm-hmm.
I mean, nowadays it's like up to 80 grand, right?
Yes.
Together. And then you have kids and all of that. A lot of the time that we do, what we try to do is whenever you are self-employed, we try to bring that number down to at least 23
Mm-hmm.
grand, 23,000, so the more you make, obviously the more you're going to want to invest into your business,
Mm-hmm.
and that's what that's going to help us do is it's going to help us bring your income lower to help you get those, what's the word? Well, to help you get like the credits, your earning
Mm-hmm.
credit for your kids, for yourself, anything of that sort, to make sure that you're getting everything that we can legally,
Mm-hmm.
back, with whether it's your tax refund, whether we're not paying in, it doesn't matter. We want to try to get you everything that we can because you are entitled to it.
Mm-hmm. Got
And
it.
so if I can bring your income down from 50 grand to 23,000, getting you your earned credit for your kids with your DJ business, that's what I'm gonna try to do.
Strategy. Just depends on what you want to do.
Yeah. But let's
Okay.
say, for example, all you make is 23,000.
Yeah.
You know, we can add depending on how much your DJ business makes. Sometimes we won't put it in there because there's just no point. We
Mm-hmm.
can, if I'm gonna charge you $400 and I'm only gonna get you $400 more. Does that make sense?
Mm-hmm. Yeah. 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 Yeah.
So it
Absolutely.
is a strategy. It's a strategy. If you know that you're gonna make more money, invest.
Yep.
By law, we have to report all of your income regardless.
Yep.
So, I mean, you might as well play it smart.
Yep. Yep. Absolutely. And maybe if you there's one company that sells equipment that I've bought from before, and whenever we've gotten close to tax time, I'll be getting a lot of emails saying, "Hey, do you need to like now's the time to invest if you need to lower your taxes?" Like
Yeah.
businesses know this, and this isn't just so you know. Everybody across the nation does things like this. So this is everyone's trying to maximize either what they get back or find a way to lower their business income to try to ease what kind of taxes that they're paying over time. So it's all a strategy based on like what you're trying to do, how your business did the prior year. But these are tips and pretty good tips on that to have you think about how this applies for your business moving forward.
Yep. And for those DJs, for example, whenever I started my DJ business,
Mm-hmm.
you don't get gigs right off the bat.
No.
And sometimes you're doing gigs for free
Right.
because you just need to get that exposure. However, you still made the investment.
Right.
For example, there's a lot of cotton fields where I live. And so, um, you have a farmer, right? He buys 2 of those huge cotton gins, right?
Yes.
For $300,000 each.
Yeah.
It was a bad year. He couldn't grow anything. He's new at it. You know what I mean?
Yeah.
Now, would he still be able to file self-employment? Yes.
Oh, he can.
Yes.
I see.
Because he made the investment to start his business.
I see
Whenever
what
he
you're
made the
saying.
investment, he's thinking, I want to be so he wants to start his business to make money.
I see.
So whenever your thought process is to make money, I want to do this to start my business, as a DJ, you're starting off maybe with 5,000 as a budget.
Mm-hmm.
You get your sound equipment, you get your laptop, you get your controller, all of that. Even if you didn't make anything, you can still do a long form.
Mm-hmm. I got it. I see what you mean. So as long as if you have the intention to start a business and you've made the investments to get equipment, but you've not made enough money basically to either cover the investments or even make money to live off of.
Yeah, there's always a loss.
Yeah, you can still apply and you just take the loss.
Yeah.
And report the loss on your taxes so the IRS knows, well, you didn't make anything, therefore you shouldn't be paying anything when it comes to your business.
Right.
Now,
right.
Real quick, there are two kinds of, so I'm self-employed. I have my business, but then I have my personal. Do I have to file it might seem like a silly question, but do I have to file 2 different tax returns?
No.
Okay.
So it should all be under one. Unless you're a big old corporation like a C corporation or an S corporation.
Mm-hmm.
That's a whole different entity. But when it comes to your individual taxes, your tax, even if you have an employer ID number, it still goes on yours.
I see. Yes.
Yeah, it's just another form that they add on to it. It's called the Schedule C that we add on to it, and that's your self-employment. And so,
yes, I'm sorry, I clicked the wrong button. Okay.
So yeah, so no, it's all your individual tax return. You know, my company, my business is called Ecstatic X Entertainment. I do have an employer ID number. It is registered, but it still goes under my personal taxes.
Got it.
It's a DBA.
Got
You know
it.
what I mean?
Got
But
it.
yeah, you shouldn't be paying for two different separate tax returns if all you have is your DJ business.
Yeah.
Or your production business. You know,
Yeah.
if all of that's under your name, it's DBA. You know, it's not, like I said, a C corporation where you have to get shares and stuff like that, or an S corp. You're good.
Okay. Cool. Now you did say something in our conversation earlier where you were talking about if you're DJing on the side and you still work a day job.
Yes.
Can you bring that up? I thought that was important.
So if, like, a lot of us, you know, especially here, when you have your full-time job, you have a W-2 job, right? And then every weekend you're out there DJing, and that actually helps you out. You know, we count that as gold. We say that's gold, yo. But because your W-2 job takes out federal taxes, right?
Yeah.
Even if you're paying in quarterly, this even helps you out. If you're paying in quarterly taxes, which you don't even have to, especially whenever you have a full daytime job, you're good. Because what that helps me do is it helps me bring your income down. You're already getting a little bit of your refund. So where you're getting probably like $3,000 to $4,000 each year on your refund, your DJ business is going to help me bring that up and double it up if I can, maybe even triple it. We've given $20,000, $30,000 refunds. I think someone in our office gave an $80,000
Whoa.
a few years ago. So,
damn.
But because of that investment, that business, it's whenever you have that W-2 and that side work, oh man, I love seeing that, because it's just like, you know what? Yes, you know, like, totally. I don't know. I get excited just seeing
that. Because you're like, they're going to get paid. They're going to get paid.
Exactly.
That's what's up. That's what's up. So for all who are checking this out, if you want more information on this, please contact Vilzap, also known as Columbia Tax Services. That is the company Blanca works with.
That we used to be called Columbia Tax Services, and now Columbia Tax Service is our legal department. So even if you have legal questions, we do have lawyers that help our clients out. You know, whether you have an audit, whether you just want to, you know, basically, Columbia Tax Service is our legal department. Bill's app is our tax service. And then we have our email and our phone number. We do have the people who you talk to are the people who are in the front lines preparing taxes every single day.
Right. Now, I want to open it up to questions. If anybody has questions, feel free to throw them in the chat. Or let me see, some people tend to put it in the Q&A box. So if you have, and I can't see, I'm going to stop the screen share so I can see if anybody on Facebook has asked questions.
I should probably do the same thing.
No questions so far. Oops. Okay, great. I'll leave it open for a little bit. Okay, we got one. Dapper Josh asks, can contributing to a traditional IRA help reduce the taxable income?
The thing is, the only time it does anything is if you take out your IRA.
If you take out?
Right. And you usually get penalized for that.
Okay.
So the IRA doesn't really, it's basically, it's your retirement, basically, almost. So,
yeah.
I mean, it doesn't really do much unless you take it out.
When I've done my taxes, I have a SEP IRA. And I've had my accountant tell me that, okay, I would owe this much in taxes. Yeah, only contributions, no withdrawal. So if I contribute X amount of dollars to my SEP, that will lower my taxes to this amount. So I've had that conversation with my accountant from time to time.
I've never heard about that.
Okay. I do think it's possible, Josh. I'm not an accountant, so I'm just sharing with you what my experience has been with mine. So there is a way. I would talk to an accountant about that then in that respect. But I think so because technically, from my understanding, is that if I'm contributing toward my retirement, then that's not necessarily income that I'm keeping. And so I put it into a SEP where I forget how the SEP taxes work. I don't know if I get taxed after I pull out or SEP is pre-tax.
You usually get taxed after you pull it out.
Okay. So
usually the IRA is basically like 401k. So they'll send you a form if you take it out sometime, and they'll send you a form if you roll it over, whatever like that half the time.
Okay, cool.
But usually as far as contributions go, I've never really seen anything as far as an IRA goes. Stocks and stuff like that, yes.
Okay.
We do put it in there, but it doesn't really move it.
Okay. Cool. So I think so, Josh. Talk to a professional. I would say that.
It's like I'm a professional, but I don't see those all like every day.
Yeah, but you haven't seen that. Yeah.
It's been a while since I saw one of those.
Def. Cool. If there any other, by the way, if you are self-employed and you don't work a traditional job, definitely open some kind of IRA, Roth IRA, SEP IRA, so that you can start putting money toward your retirement. This is the thing. One thing that the COVID-19 epidemic has shown me is that as a sole proprietor, I am not eligible for unemployment. The relief bill that's supposed to be coming through is now allowing gig workers to claim unemployment checks, which is great help for a lot of us nationally, right? But if moving forward in the future, I want to have some kind of unemployment so that I'm secure, I would have to set myself up as a corporation, pay myself through the corporation. And then in doing so, there'd be money allocated specifically for unemployment and employment tax. Like, it's a whole thing, and I've never dove into it, but this is what I figured out because of what is happening. And I'm like, oh, well, am I eligible for unemployment? As self-employed, yes, if I'm set up in this specific manner, like a corporation. But that just means there's more money to be paid because you have to pay to set up a C Corp or an S Corp. And then there's a bunch of legalities that have to go down to maintain your status as a corporation. And there are taxes that you have to cover. So you might have to cover self-employment tax, unemployment tax, things like that.
And then on top of that, it's a different entity. So like,
right, completely.
We charge over $500 for C Corps and S Corps to do their taxes with us.
I see.
So it's just
right.
Yeah.
So it's more money and more of a barrier that you would have to go through to set yourself up as that. But the backside of it, if you feel like it's worth it for you, is in moments like this when we're not working, you can claim unemployment and float yourself for a period of time. So it's all, again, just like we were talking earlier, what Blanca is discussing is a strategy for how to manage your taxes based on how much you're making. How you set yourself up as a company is also a strategy based on how you want to move in the future or how you see yourself growing over time. If you do see yourself turning into an agency, for example, where you're hiring out a bunch of DJs and plan to bring in a lot of money, that might be a good way to go, right? But there's tons of ways to set it up. There's limited liability corporations, limited liability partners. Like, talk to a professional about that. But I wanted to share with you these other options based on what's happening now. Here's a way to set yourself up for the future to cover a pandemic like this or any other situation where we can't work as DJs or entertainers.
Yeah. You know, talking about like limited liability, there was a question, I think, on the Amplify page. I remember about this guy asking if he should make a limited liability corporation with his. You could do everything Under your personal.
Mhm.
Even if you get that employer ID number, you don't have to incorporate.
Yeah, you don't. True.
So
I have a tax ID number.
yeah, I have a tax ID number.
Yeah.
But as far as, whenever you're paying people out, like that agency that you said, if you want to get more DJs under your belt and book them out and stuff like that, you can just give them 1099s.
Yes.
And just do it under your tax ID number, all under your personal taxes. It, it's cheaper, and I think it's more convenient.
Yeah, absolutely. I totally agree. That's how I do it right now.
Mm-hmm.
If I hire out DJs for bigger events because I can't do it or I'm double booked, but the event has gone through me,
Mm-hmm.
and I'm paying a DJ $1,500. I'm like, listen, I don't want to get taxed on that, right? Because if I'm getting paid, whoever's paying me is going to be reporting to the IRS saying, hey, we gave Shammy D $1,500 to do this event.
Exactly.
And I'm like, okay, well, I'm going to give that away. So that lowers what my expenses would be, because if I'm tacking on all these extra gigs that I'm not DJing, then that means I'm paying the taxes for all these extra gigs that I'm not doing.
Right.
I'm not getting really paid for it because I'm paying other DJs to do it. So all that, what 1099s are, and this is like another conversation for sure, slightly different, but related to what we're talking about. But what 1099s are basically saying is, hey, IRS, I gave Shammy D this. And then I say, hey, IRS, I paid Blanca G this much for this gig. So if you're going to tax anybody, you're not going to tax my client. You're not going to tax me. You're going to talk to Blanca.
We love 1099s. We really do.
Yeah.
Just because that's your proof of income right there.
Yes.
So, 1099 and W-2, gold.
Yeah.
Because, you already have a 1099, you have less chance of getting audited as far as the income goes because it's already reported to them.
Yes. Yes.
So.
And generally you'll get 1099 by like bigger companies and more established corporations. If you're doing corporate events, holiday parties, things like that. I DJ'd an event for a bank and they give me a 1099 based on whatever I get, whatever the rate is.
Oh, right? I didn't even get one of those whenever I did a Kia party.
Yeah.
It would have been nice, but no. I
had
my copy of my contract.
So you have proof. You have proof. But it's a whole thing, and how you set up your business and how you manage your taxes. This is why when you heard the news about Amazon saying, hey, United States, which city wants to host us? And basically every governor was like, hey, Amazon, you should come here. It's a strategic move by Amazon so that they don't pay taxes, right? All these big corporations are getting away with gaming the system in order to minimize what they're giving back basically to the economy. So these tools, these clauses, these Section 179s are there. They're there not just for the big companies, they're also there for us. So that's why this kind of information is super useful for you, and helping you maybe see that, oh, I can write this off, or I can do this because it's going to help if I pay lower taxes this year, right? Strategy. That's why you want to talk to someone who knows what's going on. And that way you can strategize what's the best move for your business now and moving forward in the future.
Mm-hmm.
Sounds good. So if you got questions, I'm going to throw the slide up one more time. Feel free.
Take a picture of it, blow up our phones.
Screenshot it.
Oh, the really cool thing is right now we are doing, we usually make you come to our offices to do your taxes with us in person. However, with the whole pandemic going on, we are doing taxes virtually now.
Cool.
Because we got to protect ourselves.
Yes.
So you can call us and email your stuff to us, and we can actually look at your taxes and all of that. We also do consultation at no extra charge, anything like that. So y'all can just feel free to call us or email us. We'll be more than happy to help you guys out.
Great. Blanca G, thank you so much for coming through and dialoguing with me about being willing to do this webinar. She's going to be due in a few weeks, everybody. So I'm very excited for that. All the best wishes to you and the little one.
Thank you. Thank you so much. And thank you for having me as well.
Of course. Appreciate your insight. And if that's about it on questions, thank you all for tuning in. Got some more webinars coming through in the next coming weeks as part of the For the Culture series. So check your emails for that. Check out the group for more information, and stay safe. Wash your hands. Until next time, y'all. Peace.